Howdy, everybody. Welcome to Liberty Call. Today is Friday, November 15th, 2024. Hope you're having a fantastical day out there in the interwebs. I'm tired. It's been a long week. and it is a beautiful day here in Colorado. We've got a few more nice days before the next storm comes through. So it's been nice to have, sunny skies, no snow falling from the sky. But anyways, hope you're having a great day out there. Before we get into the news of the day, if we could, or you could do me a favor, give me some thumbs up. A like, a share, subscribe, a follow, and press that notification bell. All righty, let's get into the markets. All right, Dow Jones was down 0.7% today, 305 points, closed at 43,444. S&P 500 down 1.32%, 78 points, closed at 5870. NASDAQ down 2.25%, 429 points. The big loser of the day closed at 18,678. The VIX was up 12.79% today. It's at 1614. Canada down 0.63, Brazil flat at up 0.05, and Mexico also flat up 0.01. Let's head over to Europe. Germany was down 0.27%, the UK down 0.09, France down 0.58, the Netherlands down 1.37%. Spain was up 0.97, Italy down 0.48, Switzerland down 1.4, and Portugal up 0.84. And it's still holding that trend. When Spain does well, so does Portugal. Something weird going on the peninsula over there. Let's see here. Russian exchange is green today. MOEX up 1.57%. RTSI up 0.57%. And the overnights, the Nikkei in Japan was up 0.35%. Australia up 0.74%. New Zealand up 0.16%. In China, the Shanghai was down 1.45%. The Shenzhen component down 2.62%. China A50 down 1.24%. DJ Shanghai down 1.7%. Hang Seng down 0.05%. And the Taiwan weighted was down 0.63%. All right. Let's bring up our chart and see how the week went for us. All righty. Well, we had sort of a holiday on Monday, but the markets were open. Let's start with the Dow Jones and see how it finishes the week off. It's going to be down about 1.27%. The S&P 500, it's going to be down about 2.09. The NASDAQ, where is it? There it is. NASDAQ's going to be down 3.17. The Dow Transports going to be down about 0.75%, and the Dow Utilities up 0.15. There's one bright spot for us. So, all right. So those are the markets for the week. Let me put everything back the way it's supposed to be, so that when I come in Monday, I can find my stuff, or I know I'm looking at the right charts. All righty, well, let's hop into the economic data for the week, starting out with jobless claims. Initial claims came in at 217,000. Forecast was 224. Previous number was 221. Continuing claims came in at 1.873 million. Forecast 1.88 million, and the previous number was 1.884. Consumer Price Index year over year grew at 2.6%, right on forecast. Previous number was 2.4%, so inflation has heated up a smidge. The CPI month over month grew at 0.2%, right on forecast, same as last month. Let's see. The Producer Price Index year over year grew at 2.4%. Forecast was 2.3. Previous was 1.9. And on a month on month number, it grew by 0.2, right on forecast. U.S. retail sales year over year grew at 2.85%. Previous number was 1.98. And on month grew at 0.4%, slightly above the 0.3% forecast. Previous number was 0.8. All right. U.S. industrial production year over year contracted at 0.29%. Previous number was a contraction of 0.73. And on a month, it contracted by 0.3%, right on forecast. U.S. import prices year over year grew at 0.8%. Forecast was 0.3. Previous number was a 0.1% contraction. And month over month, import prices grew at 0.3%. The forecast was a contraction of 0.1, and previous number was a contraction of 0.4. Export prices year over year contracted at 0.1%. The forecast was negative 1.7%. Previous number was negative 1.9. And month over month, export prices grew at 0.8%. The forecast was a negative 0.1. Previous number was a negative 0.6. And last, U.S. business inventories grew at 0.1%. Forecast was 0.2. Previous number was 0.03. Or I'm sorry, 0.3. All right, so that's all the data that was out this week. Feel smarter? I know I do. Let's get into the weekly, or the, not weekly, the market recap. S&P 500 in weekly loss as economic strength cools, rate cut bets. All right, the S&P 500 ended the week with a loss as the post-election rally lost momentum amid fresh economic data suggesting stronger than expected growth. Retail sales in the U.S. rose by 0.4% in October, surpassing the 0.3% forecast, while September sales were revised upward to 0.8%. This indicates robust consumer spending and continued economic strength. Similarly, U.S. import prices unexpectedly rose by 0.3% in October, signaling that inflation remains a challenge. The data pushed Treasury yields higher as markets adjusted their expectations for future Federal Reserve rate cuts. Federal Reserve Chairman Jerome Powell had earlier warned that the strength in the economy would allow the central bank to take a more cautious approach to rate cuts, easing concerns about immediate monetary easing. Several companies experienced notable movements. Applied Materials saw a 9% drop after reporting weaker than expected earnings, citing slowing demand from China. Domino's Pizza gave up gains and closed 1% lower. Conversely, Pool Corporation rose modestly, fueled by an investment from Berkshire Hathaway. Alibaba fell 2% after reporting moderate revenue growth in its latest quarter. In a more political development, President-elect Donald Trump's cabinet continued to take shape with reports suggesting that Fox News business host Larry Kudlow is being considered for the role of National Economic Council Director. Good. I get tired of looking at this fool on my TV in the afternoon, so I'm not real impressed with him. I know Trump and a lot of the morons on the right really love this guy, but he seems like a blowhard who really all he does is like checks the cliff notes and then gives an opinion. So I've never heard him say anything that really blew me away. Like, probably my favorite economist that's, on TV, but also, runs a book of business is Brian Westbury from First Trust. That dude is smart. All right. Wrapping up, overall economic strength is now seen as a double-edged sword as it raises the likelihood for fewer Fed rate cuts, which had been a key factor driving the post-election rally. This uncertainty combined with mixed corporate earnings weighed on market sentiment as the week drew to a close. All right. Well, I like I said last week, after the election and, everything was rallying like crazy, I'm like, we still have all the same problems that we had, a week before, month before, year before, a decade before, all the debt and overspending. I was complaining about this 20 years ago when I was, wet behind the ears financial advisor to Ameriprise, and it, drove me mad. And now the debt is 5 times higher, 4 times higher. It was like 8 trillion at the time, and now it's 36. Anyways. All right, let's get into some data. This comes from via First Trust, October industrial production and capacity utilization. This is going to be some exciting stuff, folks, so hold on to your seats. Recent weakness in industrial production should not be a major concern, as temporary factors have been holding back growth, according to the Federal Reserve. They're very trustworthy. The Boeing strike in October reduced total industrial production by 0.2 percentage points, while the lingering effects of 2 hurricanes subtracted another 0.1 percentage points. These issues are expected to subside, leading to potential catch-up growth in the coming months. The weakness in October was primarily seen in manufacturing, which fell 0.5%. The auto sector was particularly affected, with production dropping 3.1%. However, non-auto manufacturing, a key indicator of the broader industrial landscape, showed a smaller decline of 0.3%. A positive note came from high-tech equipment production, which rose 0.6%. Reflecting investment in AI and the reshoring of semiconductor production. This segment has grown at a strong annualized rate of 10% over the past 3 months. The mining sector also saw a modest gain of 0.3%, driven by higher oil and gas production, while utilities increased by 0.7%, largely due to weather factors. Additionally, the Empire State Manufacturing Index surged unexpectedly to plus 31.2 in November, signaling a strong rebound in manufacturing sentiment in the New York region. All right, so it's kind of a mixed bag. They seem to think that they're going to catch up on some of that production that was lost due to strikes and hurricanes and all sorts of stuff. So I guess that's positive news. All right, next up, also from First Trust, October retail sales. This was put together by Nate Gersey. All right, here we go. Despite ongoing inflation, consumers continue to spend, with retail sales increasing by 0.4% in October, slightly above the expected 0.3%. Revisions to previous month's data raised the overall gain to 0.6%. 8 of the 13 major sales categories saw growth, with a notable 1.6% increase in auto sales. However, excluding autos, gas stations, and building materials, core retail sales remained unchanged, with the core group, restaurants and bars, posted a 0.7% rise, marking continued growth, but slower than the previous year's 8.6% increase. Sales in health and personal care stores and miscellaneous retailers declined, down 1.1% and 1.6% respectively. Year over year, retail sales are up 2.8%, roughly matching inflation. Adjusted for inflation, real retail sales have only grown by 0.3% in the past year, still below early 2022 levels. This indicates that while consumers are spending more, they are receiving fewer goods for their money due to rising prices. Who has brought that up recently? Oh, it was me. I brought it up that home prices are actually quite stable over the last 10 years. And, in recent months have actually been going down. But that's when you price it in gold, silver, things that aren't losing their value over the last, 4 or 5 years. Yeah, you're getting, you're spending more and getting a smaller box of Cheerios, folks. You're getting robbed. Yep. Meanwhile, import and export prices rose unexpectedly in October, highlighting ongoing inflation pressures. With the Federal Reserve cutting interest rates by 0.25% last week and potentially cutting again in December, it remains uncertain whether inflation will subside. Despite economic challenges, it's crucial that the Fed remains committed to addressing inflation. Yeah, someone was showing a video. It was Rachel Maddow saying, "Well, inflation is way down." It's like, wow, you're dumb. Yes, the rate of inflation is down, but no prices have gone. Other than oil, that's about it. As far as, prices going below where they were. So, it's nuts. All righty. One more article comes from our buddies over at the Zero Hedge. Consumers are drowning in debt as hordes of businesses fail all over the U.S. This was written by Michael Snyder via themostimportantnews.com. See what he has to say. U.S. household debt has reached an unprecedented $17.94 trillion, marking a new record and highlighting the nation's deeply troubling resilience on debt. Consumers are particularly burdened by credit card debt, which has surged to $1.17 trillion and an 8.1% increase over the past year. The growing debt is outpacing income growth, exacerbating financial strain. Additionally, student loan debt has ballooned to $1.61 trillion, with 30% of borrowers reporting they've had to skip basic necessities like food and medicine due to their student loan payments. See, that's why it's important, folks. You pay for your college as you go. You don't borrow the money. You could do something stupid like me and my son did and join the military to get free college. And he got his degree while he was serving. He just got out of the Navy last week. And I never finished college because, life got in the way. But, I did go to school and I, learned some, stuff, it seemed like a giant waste of time while I was there. But my point is, you pay as you go with college. That way you don't build up $100,000 or $200,000 or $300,000 worth of debt. I've worked with a lot of people over the years after I got out of the military, and especially the younger folks that I worked with at Ameriprise. I was shocked to see how much debt that these people were carrying, on student loans. It's like, really? Why? It's not that expensive to, wait tables and go to school. Yeah, you have less time for fun, but anyway, you're going there to learn something to then go and have a career. You're not there for, chasing. Well, I guess you could be there to have fun. But anyways, with 30% of we already talked that. Many also report delays in buying homes or starting families because of their student debt. Well, being poor never stopped me and my wife from having kids. The economic repercussions of the massive debt are already becoming evident. Retailers are closing stores at an alarming rate, with 6,481 closures in 2024 alone, the highest since the pandemic. The auto industry is also struggling, with companies like Nissan and Stellantis cutting jobs and reducing production to declining demand. Similarly, tech companies including AMD, are laying off workers in response to financial pressures. Small businesses are also suffering, with nearly half unable to pay rent, the highest level since the pandemic's peak, with widespread financial distress signals the bursting of the debt bubble leading to a difficult economic future. While the inflated standard of living fueled by debt may have been enjoyable, the inevitable reckoning is now here, and the pain is expected to be severe. I 100% agree. It is probably going to be bad because we were due for a market downturn, bear market, whatever you want to call it, 4 summers ago. And, the powers that be in Washington turned on the money spigots and saved us, and increased the money supply by 40% over that time. And now we're dealing with the consequences of that. And we still haven't gone through that downturn to wash out all the malinvestment out of the business sector. So I think it's going to be bumpy, but hey, what do I know? I'm just a financial advisor. Anyways. All right. Well, that's everything that I had for today. If anyone needs anything from me and needs to get their financial crap together, go to DSAFinancialGroup.com. Doodle-doo-doo-doo. It's right there on your screen. Take a screenshot, folks. Anyways. All right. Well, I hope everyone out there has a great weekend. I think I'm probably going to do some chores and be lazy and because I'm tired and sore. And anyways, hope you have a great weekend, and I'll talk to you again next time. Adios.